Gurmeet Chadha is joining us, Managing Partner and CIO at Complete Circle. Gurmeet, great to have you on the show as always, and always lovely to chat with you. I'm going to start by talking to you not necessarily about today's markets and stocks and sectors. We'll come to all of that. But I want your take on the whole IPO outlook, and especially SME IPO outlook. A lot of commentary coming in from Ashwini Bhatia, also yesterday, whole-time member of SEBI. You've had a SEBI note on the way investors are behaving post IPO. 50%, more than 50% just sell in the first week. What is it telling you? Is this the marker of froth in the primary market, or too early to say that?
No, this clearly froth. I know some of the Delhi-based companies, some of them do very basic civil work. They are launching IPOs. Somebody, is into pipe fitting. They are talking of water management. I think in a lot of cases, I think even the numbers look a little tricky. I'm not saying all SME IPOs are bad. I think that it would be bad to generalize everything. There are obviously a lot of good ideas. But obviously a lot of not so good names with the purpose of making quick money are coming in. And I don't blame the promoters alone. I think the investors equally. I mean, 50% of them exit within a week. To be fair, even the IPO, which made a lot of headlines, they only price it at 21 crores with 2 crore kind of a PAT, 1.5 crore. So retail will subscribe 500 times on that IPO. So I think you have to be careful. You don't know when the music stops. And in Delhi we say that if you are in a midnight party, be closer to the gate and not in the center when the party is going on, because you never know when you have to actually end up paying the entire bill.
Right, Gurmeet, well, that's more macro, and I sort of view coming in not too much in terms of actionables, but tell me, what have you done with these recent IPOs? Have you subscribed to any one of those? Talk to me about the new listing today. Premier Energies, 100% gap up is expected. Now, this one's going to be phenomenal in terms of listing. And while we are at it, you had Ola Electric recently, you've got Bajaj Finance Bajaj Housing around the corner. In a few months from now, you may even have Swiggy, which has become the talk of the town in the unlisted space. Any of these that are catching your attention or have caught your attention?
The only one we added post IPO was Zomato. It's been a decent run for us. I think it was the turnaround for us was the quick commerce. They've already reporting 1,000 crore kind of a revenue. My sense is that in a year from now, that also should be a bit of positive. I think, and that's where the runway is 50-60% kind of a growth, because food delivery now, Zomato already has almost 8 crore plus transacting users. So that can now grow at 20-25%. The market is the penetration. We have 21-22 crore households. So and 8 crore people are already registered there. So the growth could be 25-30%. I think the quick commerce is something which I think can grow and has very long legs. And I think the government positioning also, government is not very happy with way Amazon and others do deep discounting. Quick commerce is more integration with the local ecosystem and more on convenience. And with the ticketing business, I think that should do well. We are tracking the Bajaj housing IPO closely. This could re-rate some of the other good names also. So even if you see at the upper end of the band, it's valued at about 58,000 crores. And they have almost 8 crore kind of, almost 76, 77 million kind of a customer base. Very good ROAs. Bajaj is known for excellent, analytics. And I think there's a lot of focus on affordable housing. One rub-off could come on some of the other HFCs like PNB Housing, already run up a little bit. But if you see now, the corporate book is just 3% of the assets, trades at 1.1 FY26 price to book. So amongst the cheapest there. And it has the ability to, continuously do 2% plus kind of an ROA. And the legacy book almost now, the corporate NPA is almost nil. So the book is expanding very granularly. So there could be some rub-off there as well. So these are this is the one which I'm looking at, and obviously it has a impact on Bajaj Finance now, because which we hold that in our portfolio. It was a bit of a laggard. Bajaj Finance has sharply moved up, and my sense is a lot of good NBFCs will move up as interest rates get cut and bond yields come down.
You said you had Zomato and you still like Zomato, and in that same breath, I don't know whether you mentioned what your thoughts on Swiggy were. But it's getting a little bit of attention, with this constant conversation about them looking to file a DRHP, a listing expected in a few months. This morning, Hindustan Composite from its treasury book, I think, has gone out and picked up a little bit of Swiggy. What do you feel at 340, 350? Swiggy looks good at a 10 billion valuation. I know they had a down round a few months ago.
Yeah, it's almost, I think, close to 74, 75,000 crores. If you see the last round at about 325, 340 is where the unlisted prices are. My little bit concern there is on the Instamart, and I think it's not done as well as they would have wanted it to do. Zomato is already talking of 2,000 plus dark stores. Instamart is still much lower. In fact, Zepto is actually doing a little better as far as our little bit understanding and channel checks go. So I would like to wait it out. I mean, in the unlisted space right now, we were doing NSE post bonus issuances. Obviously, there's been a sharp move. Another one we have recently done is the OYO. So that was available at a very good rate at almost like 30 rupees. So unlisted space, pre-IPO space is hotting up, but investors should remember that space does not have liquidity. A lot of us have forgotten what happened with the Tata Tech IPO. Grey market was trading at 1500. The IPO came at 500. The stock is still at about 1000 despite a stellar listing. So the best of the names, if you only enter that pre-IPO space is hot, you should come and you should take advantage of it. It A has illiquidity issues. Second, the prices are all over the place.
Gurmeet, let's move to some of the themes in the market today. Is it too early to herald the return of the defense story with one HAL and then a whole host of them running up as well? The sense being that after about a 6-month lull due to pre-elections and then transition to the new government, etc., now they're back in the saddle and all of those allocations will begin. Is that an idea you're on board with?
I think you got to be selective. I think you should also see how they have run up. I mean, last 6 months consolidation is good. I would have probably wanted some price correction to probably take more positions. HL in particular, I think the today's is because of the news of 220 odd cryo engines being supplied to Sukhoi. They also are facing a bit of an issue in terms of executing the Tejas order. See, in a lot of these, fighter jets, etc., there's a lot of risk in terms of execution. There are a lot of risk clauses. There's the risk of orders getting called back, some compensation clauses if they don't meet specification. It's a very technical business, and right now we are just we were happy just keeping a multiplication to the stock just based on the order received. And the business is lovely. But in HL's case, because two-thirds of the revenue comes from service maintenance, it is a little more stable. And if you add this current order to already 1 lakh crore kind of an order backlog they have, it's almost 4 times their 12-month sales. So I think HL in particular, I think looks good. I would be happy if I get a little bit more price correction in terms of making fresh exposures. We like solar industries also, which is a combination of chemicals and defense trade. Defense is just 10% of the book. Our sense is in the next 2 to 3 years, solar, defense book could be 25, 30%. And they are doing some very good work on Pinaka rockets, on hand grenades, on a lot of defense stuff. Also, there's a lot of companies which will benefit because of the offset clauses. So, almost 50,000 crores worth, there's a 30% offset clause. The unutilized amount is almost 42, 43,000 crores. By FY27, this figure would be 80,000 crores. And there are just about 20 odd companies which are notified, which are eligible for this offset clause. So if you research well, you might get more opportunities slightly lower down the value chain in terms of the smaller companies, in a lot of spaces, including sensors, including drones, including a lot of other, electronic equipments. So I think you got to be selective, and our exposure right now is between solar, Zen Technology, and HAL.
Okay. Gurmeet, good morning, Neeraj here. Gurmeet, post this earnings season getting over, what between the reportage of earnings and the commentary, relative to valuations, of course, has excited you the most?
It's actually made me a little nervous, Neeraj, Q1, if you ask me. Because if you see BSE 500 as a universe, the EPS growth has been sub 5%. Almost 250 plus stocks are now at 50 PE. Now that's not great news if the valuations are what they are. So as I said, you got to be a little more selective. One space which is looking good to me is healthcare. Also, one thing I've liked about pharma is that it doesn't make too much noise. And if you look at last 5, 10, 15, 20 years, it's beating Nifty 50 almost by 1.5%. And across time periods. And if you see the beta on the downside is just zero point 0.5, so it actually falls half whenever there is turmoil. We saw that recently, just about a few weeks back during the yen carry trade unwinding, and the representation is only 5% on BSE 500 index, which is almost what equal to HDFC Bank. So my sense is that there are a lot of opportunities, and that this biosecure law likely to be a reality in US. It could open up huge opportunities both in APIs, formulations, and a lot of CDMO names. We are lucky in terms of having some exposure to Newland. That's done quite well. Where we haven't probably done well is Laurus Labs. But we're looking to add more names. We added Mankind Pharma post the acquisition when the stock went down. That's more in the branded generics place. And now they are cementing their place in women fertility. I think that's one area which is, if you see around you, you will see so many fertility centers going up. It's a genuine problem. And the company they've acquired has serious skill set in that. And we might look at some companies in generics as and when this, the biosecure law takes final shape.
Meet, what are you advising your clients to do right now? If somebody with an average risk profile, are you telling them to sit on some cash? Are you asking them to continue allocations to the STP route? I'm just trying to understand what does an investor do? Take profits off the table, add incremental cash, and also in that same breath, is the bias now on the large cap space? Because we've talked for months about how large cap should play catch up, and we're now seeing early signs of that happening in the last few weeks.
I think some mean reversion should happen and must happen because Nifty is still 19 times if you take forward earnings. And I'm not saying it's cheap, but it's still slightly above the long-term average versus mid and small cap, which are 24 times and 26, 27 times. Uh, our call has been, if I remember speaking to Neeraj also some time back, that the long end bonds made a lot of sense to us around March when the yields were around 720, 725. It's still at about 685, 690 range. My sense is that you will see 10 years he said closer to 625 12 months from now. We may have a shallow rate cut cycle, but we'll still have 50 to 75 basis points. We are also getting $2 billion kind of monthly flows now with the inclusion in the global bond index, which means a long dated bond, the yields can soften by 50 to maybe 75 basis points, which could mean a mark to market gain of 4 or 5% above your coupon, which is closer to 7, which means you can make double digit return in a bond fund with let's say a 12, 18-month view. We've been asking clients to add a little bit of gold with the kind of turmoil we are seeing geopolitically. And some impact can happen when Fed cuts rates, maybe a little bit of devaluation of dollar. Not too sure, but in general, I think the outlook on dollar is not that great, considering what US is going through, record deficits. So gold and long dated bonds we have added in the portfolio. It has given returns. Second, it also reduces your beta a little bit on the downside. And we are selectively advising some good themes where we see rotation coming in. Financials are making a lot of sense to us, so we are adding more there. We are rotating it. IT made a lot of sense 6 months back. Nobody wanted to touch IT. Infosys was 1,200, TCS was 3,000 bucks, HCL Tech Mahindra was 1,000. So it happens always. You got to be a little ahead of the cycle sometimes. That also means you may have to take a little bit of underperformance. To us, I think financials, NBFC especially, and some banks are making a lot of sense. And selectively, we are adding, as I said, bottom-up stock themes, including in recycling space, including a little bit in data center themes.
Gurmeet, just wanted to get your take on a couple of sectors that are buzzing. Auto is one of them, and the numbers that have come out for the last month have at least put the two-wheelers squarely in focus. Bajaj, TVS, Hero. What is your ranking over here, and are you finding passenger vehicles less interesting relatively?
No, it's just that the stocks have run up a bit. It's not less interesting. If you just see the movement in Tata Motors and M&M last 2-3 years, I think it's probably would have been as good as some of the small mid caps or even defense names. So incrementally, we added TVS Holding, which was a holding company of TVS because of the special situation in the stock. it was getting split into three, which was the holding company, Sundaram Clayton, and a preference share. I mean, that's yielded great results. I remember before the split, the price was 4,500. We already have almost 14,000 on TVS Holding. We have Sandhar Technology as one of the ancillary plays there. It makes frames for earlier, it was just a one product, one supplier. It only used to supply to Hero, and that too largely locks. Now they have become, they have a very good portfolio now. The EV portfolio, they have great guidance on, looking at almost 1,500 crores there over the next couple of years. They also make frames for large good selling models like TVS Raider. A frame typically costs about 35,000 bucks for a motorcycle, and they are getting into cabins, fabrication, tooling, etc. So it's a very diversified portfolio now. We are looking at Bajaj, especially that this is one platform which has all three, which is the IC engine, the flex engine, which is ethanol, as well as the EV portfolio. Chetak, as per channel checks, is getting very, very good response. Once you see more variants, etc., the number for both Bajaj and TVS iQ can actually pick up. So that's that. These are the things which are in our radar as far as the auto goes.
Thank you very much, Gurmeet. Good talking to you, getting some perspective on IPOs, what looks good, what doesn't, what sectors, and what sort of a portfolio strategy one should be adopting in the current market backdrop. Thanks for joining us.